Hello everyone, Mark Panazon here, mortgage broker and partner with Mortgage Connection. Today was the Bank of Canada overnight policy rate announcement, and they have cut the policy rate once again by 0.25% down to 2.75 as widely expected. So today I'm going to go over some of the news, what the rates might look like, and some of the impacts and forecasts going into the future. So here's my 2 cents. Here's the official announcement on the Bank of Canada website. Just a couple things that are interesting to note here. The first paragraph here talks about the Canadian economy entered 2025 in a solid position with inflation close to 2%. This was that nice big move down post-COVID. However, with these trade tensions and tariffs imposed by the US, it's creating a lot of uncertainty, and this will likely slow the pace of the economy and increase inflationary pressures in Canada. Therefore, they cut the rate. So these uncertainty things that's happening, all these uncertainties in the market are creating the Bank of Canada to be cautious. And I think this was the right thing to do today. Now, they also mentioned down here that monetary policy cannot offset the impacts of trade war. That's not the purpose of monetary policy and moving rates up and down. It's really to control inflation. And inflation is already under control at 2%. But it does note here, what it can and must do is ensure that higher prices do not lead to ongoing inflation. So that's going to be the mandate. So if inflation does start to tick up because of tariffs, you can probably bet the Bank of Canada may pause rates or maybe even increase rates. Too early to tell with the flip-flopping of President Trump going back and forth, but something to keep an eye on. And that's what they're mentioning there in this post here. So good news for existing variable rate mortgage holders, adjustable rate mortgage holders, and anyone that has a HELOC, as well as any unsecured lending. All of your interest rates have been cut by 0.25% effective today. Your bank will likely adjust the prime lending rates over the coming days, so you'll see that impact on your existing mortgages going forward. If you have a fixed rate mortgage, nothing will happen, as this policy rate only applies to variable rate and floating rate mortgages. Now here's a snapshot of the current market with the rate. So what I'm showing you here is inflation, which is the yellow line here. We have the Bank of Canada overnight rate, which is the red line. And then we have the bond yields, the 5-year bond yield, which essentially is fixed rates. So you can see that inflation has now been controlled. It's been down here to the 1.9%. The next reading is next week. We'll see if it ticks up or not with the recent tariff news. But because of that, the Bank of Canada has now gone on to 7 consecutive rate cuts. And today's rate cut puts them almost exactly in line with the 5-year bond yield, which means fixed and variable rates will essentially be on par now, or neck and neck. So they haven't been this close since probably back here in October of 22. However, the direction of rates was going up, and now the direction of rates is going down. So that's good news. Inflation, we'll see what happens with that. But overall, good news for variable rate holders. Maybe not the greatest news for the economy with the tariff news, but if you're thinking of getting into a home and you're thinking of getting a variable rate mortgage, that's good news. Or if you have an existing variable rate mortgage, that's also sort of a good news story. I want to show you the actually existing monetary policy report at the Bank of Canada's website. So this was posted in February. So this is their projections in February. The next one comes out at the next Bank of Canada meeting in April. So we'll see what the update looks like. However, you can see that the forecast still shows that 2.5% is probably where the overnight rate will land. So today it was dropped to 2.75. So the bank is projecting one more rate cut. However, it does have the potential to get down to 2.25. The range is 2.25 to 2.75, but they're pricing in at least another 0.25% rate cut. If you consider what the major banks are all doing, I'll bring up this forecast from a little while ago, which shows the overnight rate was 3%, and as of today, that's now 2.75%. And if you look at what the projections are from each bank, say by the end of this year, BMO is suggesting the rate will be cut 0.5%. So now that would be an additional 0.25% after today's cut. CIBC and National Bank and TD Bank are all being much more aggressive. They think it'll get down to that 2.25%. And Scotiabank believed there would be no rate cut today. They were wrong. So they were certainly the outlier, though. They're the only lender that were suggesting there was no rate cuts. And you'll also notice here that there's an asterisk here, and that would indicate that there's no U.S. tariffs. And they expect the policy rate to go down to 1.5% in the event of tariffs. So this is definitely something to keep an eye on, and this would be a bullish case for variable rates coming down. So overall, variable rates are coming down. There's probably more room to go. Will there be just one more rate cut, or will there be 2 or 3 rate cuts? Somewhere in the middle, I'm sure, is where the truth will come out. So where are rates as of today? Well, the lowest rate on the board right now is a 3.99% rate. That is a 5-year fixed rate mortgage with one of our smaller lenders, Radius. So it's kind of a splashy, hot deal. If you're looking for, just the lowest rate, that's where we'd go. Would we recommend that lender or rate? That's to be determined based on your situation. If you look at variable rates, these rates have not factored in the rate cut today. So all of these rates will be 0.25% lower. So on the very low end, you're going to be around 4.1-ish%, 4.1, 4.15, right around that area. So it's going to be really close to the floating rate. So if you compare the two options, a 4% fixed rate for 5 years, or what will be after today's rate cut, around 4.1% for a 5-year floating rate. So it's essentially the same rate if you're looking on the bottom end of the spectrum. Where do we go from here? If we get that extra 1% rate cuts like BMO suggesting with the tariffs, then maybe this gets down to 3%. Obviously, that would be a really bullish case for variable rates. Remember, with variable rates, you can always lock into a fixed rate anytime. So again, a lot of the advice I'm giving you right now is if you are in a position to be able to afford the risk of a floating rate mortgage, you can consider taking that variable rate, and then it will you have the option to convert it into a fixed rate anytime without penalties. So you have an exit strategy there. So rates are looking competitive. On the broader market, you can see that GDP was growing at a pretty good growth rate here last year. So we were ticking up. The economy was starting to grow. And so, that may have made the Bank of Canada pause on rates. But with now this recent tariff news, that was kind of a bad news story for the economy, hence the additional rate cut, because we were kind of trending upward. In terms of unemployment, which is another major factor, we were grinding up, which is a negative story for the economy. Good for rates. We've also been trending downward. Now, there was a pause month over month here from January to February. So will this now just kind of be flat? We'll see. All these things factor into what the Bank of Canada will do. Lastly, I just wanted to bring up the rent prices. So here's an article here. Rent prices fall 5% in February, reaching the lowest level since 2023. So rent prices are down. Interest rates are down. And so, the tariffs are here. It'll be interesting to see what is going to be happening this year. We have now a new Prime Minister in Mark Carney. I'm assuming an election will be called any day now, and then we'll have a federal election, and then finally we'll have a new Prime Minister with a new 4-year mandate that can negotiate with Trump to see what kind of tariffs or what kind of economic activity will happen because of the tariffs or no tariffs. So it's going to be an interesting year, probably a bumpy few months until that gets sorted out. Certainly the stock market has been impacted as well. So we'll see what happens. But good news today, we got the Bank of Canada rate cut. So if you have any questions with your mortgage, let me know. Otherwise, have a great day, and we'll talk to you at the next Bank of Canada meeting, which will be in April, mid-April, for that decision. Have a good day.